And there you have it, the closing bell at the New York Stock Exchange. U.S. stocks attempted to rebound today after Wednesday marked the worst day of losses since 2020, but the Dow Jones did end the day still in the red, down about 240 points.
Not a good day either for the S&P and NASDAQ. The S&P fell by around 0.5% and the NASDAQ by roughly 0.25%. To break us all down with here is Denton Cinquegrana. He is a chief oil analyst for the Oil Price Information Service, a Dow Jones company. Thank you very much for joining us, Denton. And let's start with the oil prices, which have fluctuated significantly over the past few days. What is behind that fluctuation?
I think part of it is, and you're absolutely right, we've seen quite a bit of price movement, volatility. Today's a perfect example where you've seen almost $8 between the high trade and the low trade today. I think part of that stems from the fact is there's just not a lot of trading going on in the futures markets right now. I think there's a lot of danger in trading right now. With these wild price swings, people could be wiped out pretty quickly. So I think there's a lot of danger, like I said, involved. And so as a result, you have less trading activity, and that brings on these larger price swings that have kind of been around for the last couple of months. And that's why it's really hard to kind of nail down a price for oil. We've seen prices go from below $100 recently to as much as almost $115 this week.
Denton, of course, we know that for so many Americans, it's the gas prices that are hitting them so hard. The national average gas price hit another record high today, approximately $4.59 per gallon for regular gas. So, consumers who are faced with that addition to their monthly budgets, are there other places that they can save money despite these price spikes?
Yeah, it's really difficult right now. And that's what it comes down to, the elasticity with gasoline demand. At first, there's really not much you can do, but over time, it becomes, I can carpool, or I can work from home maybe 4 days a week instead of 3 or 2. It's things like that take some time to, kind of develop and emerge. I mean, the ultimate thing is getting rid of your car and getting either a new, more fuel efficient car or an electric car. That's something that takes place down the line. But, in the real near term, it's hard to make any real kind of significant cost savings adjustments. I mean, you could stay home, but that's kind of boring. We did that for a full year.
Mm-hmm. Absolutely, especially with summer travel season right on our doorsteps. Denton, also back in March, President Biden announced a plan to release 1 million barrels of oil a day from the strategic reserve. So what other options does the administration have to perhaps ease some pressure at the pump for so many families?
Yeah, I think one of the things that can be done is a gas tax holiday. We've seen several states implement them pretty successfully. It's brought down prices. The federal gas tax is about 18.5 cents. I think it's 18.4 cents to be exact. So again, hacking off 18 cents of the gas price, obviously, you're still well over $4, but it would certainly help. Some of the states that have issued these gas tax holidays, they've seen prices come down. But the concern with the gas tax holiday is if you have lower prices, does it kind of artificially stoke demand? And I think in this high inflation world that we're living in right now, and it's obviously not just gasoline, it's just about everything. I think you kind of need a little bit of demand destruction, and I think we're starting to see that with $4.60 gasoline. A little bit more anecdotally, we're starting to hear from folks that own retail gasoline stations that their customers are downgrading from premium gasoline that's over $5 a gasoline down to mid-grade and regular. So I think that might be the first signs of some demand destruction.
Right. All right. Well, Denton Cinquegrana, chief oil analyst for the Oil Price Information Service, thanks for your insight.